Hello, everyone. Very good morning and good afternoon. This is Akshay, the moderator for today, and I'm gonna just take the honor to thank you all for joining us. A couple of things before we start our session. Request you all to please mute your phones during the presentation. And if you do have any questions as we progress through the masterclass, please post them to the host on WebEx chat, and we will respond to those questions at the end of the presentation. And if we are left with any unanswered questions due to time constraints, we will respond to them separately over an email. We are also recording this session and will be available for all the registrants, and we'll be sharing the same with you. For today's masterclass, enhance your customer's experience with real-time payments. Our speaker, John Salek, who is a order-to-cash process expert with 3 decades of proven performance across a broad range of industries and over 250 clients. And John continues to share his knowledge and experience along with his insights with us. Let me now invite John to begin the session. John, over to you. Thank you.
All right, thank you, Akshay. And again, we have, I think, a very good topic, one that's very interesting. I suspect for some of you, it's one you've heard a lot about, kind of like tangentially or background noise. But let's spend some time today, take a little deeper dive so that you all understand it and exactly what it is when we talk about real-time payments, digital real-time payments. So a quick introduction where we'll define some of those terms. And then, let's dive right in to what the advantages are in the business-to-business arena. Then talk about a specific cash flow benefit that's attainable when you combine real-time payments with touchless collections. I share with you a customer success story, recap the benefits are, have a quick conclusion, and then answer any questions you have submitted. So let's start with some definition. If you're like me, you hear and you read about different things and new developments, and they have terminology, and then of course acronyms, right? All sorts of acronyms. So here's an attempt to try to straighten some of that out for you. So real-time payments, also known as RTP, are also called digital real-time payments and frictionless digital payments. So they're all those terms are talking about the same thing. And at their very basic level, digital real-time payments are made directly between the buyer and seller. Okay, nothing new about that. But the payments are made through a direct, secure internet connection on what's called an account-to-account basis. And again, it's got its acronym, HWA. And then you see here, I have a little note there, similar to EDI. If you think back to EDI, the electronic data interchange, that's a technology that's been around for at least 30 years, maybe more. And what it is it's a direct, secure connection between two companies, a buyer and a seller. And it's been used for years, place orders, acknowledge orders, send invoices, send remit advice, communicate stock levels, things like that. But it's been limited, typically only used by big buyers and big sellers. So if you're a company where your top 10 customers control 80% of your sales, it probably makes sense, and you've probably established an EDI connection with those 10 customers and probably did it years ago. The drawback is it's expensive. The EDI has to be integrated with your ERPs, ends up being customized for every customer you connect with. And they have to customize a little bit for you as a supplier. So it ends up being, a bit of a long implementation time and pretty expensive, quite honestly. So that's why it's been limited over the years to big buyers and big sellers. And I've had clients where they've established EDI with 3 or 4 customers. And I ask them, well, you got another 3 or 4 that are about the same size. Why haven't you established EDI with them? And the answer is, well, we're constrained with our IT department for to do the customization, and it's time and it's money, and we just never got around to it. So where digital real-time payments have some real value now is in many respects they emulate EDI, and you can have that secure one-on-one connection with customers. Focus primarily on payments, and that's the next point. Uh, Digital RTPs enable payments from buyer to seller. It's different as long as you have access to the internet, you can make those payments. So it accommodates a wide range of mobile devices. And, for the business to consumer market, the advantages are obvious. I mean, it's immediate payment on delivery. I say a good example here is a flea market. Vendor sells something, you buy it, pay them right there. Uh, Certainly fits the needs of those vendors, and extension of credits not required. So it's certainly helpful there. But talk about what its value to the business sector is. Customers who normally don't pay on delivery or on order, but extension of credit. Well, the first big advantage that I list here is the enhanced customer experience. Now, there's other benefits that we'll get to, but you might be thinking, well, why is this number one? Why is this the first one? And if for those of you who joined us a couple of weeks ago for our master class on strategic AR management, we discussed how being an excellent customer experience is now as high a priority as any in managing the order to cash function and even in managing the credit and collection department. Now, generating cash will never lose its importance, but over time, what in the marketplace is this emphasis on customer experience has grown tremendously, particularly in the last decade. So what you do with our real-time payments is those customers who want to pay using real-time payments, you can accommodate their preference. And, you know, accommodating the preferences of your customers is a good way to build loyalty and grow revenue over the long term. And there's another reason too, if certainly your small and medium-sized businesses, typically driven by an owner or a small group of people, and they usually don't do the admin work during standard business hours. They take care of paying their vendors at nights, on weekends, and to the degree that you can enable them to do that, one is serving their needs, and two, probably get you paid a little earlier. They'll do it at night, one weekend. So that's the first big advantage. The second one is cost, all right, which is never far from anyone's mind these days, and that's the way it's been for years as well. And it's the direct cost of processing payments. Clearly, you start receiving a high volume of payments via real-time payments, that's going to reduce your lockbox costs for processing paper checks, and even key punching the remittance advice. It's all going to reduce in volume and lower your cost. And if you set up your real-time payments to steer your customers to paying via ACH, automated clearinghouse, rather than credit and debit cards, you'll see a reduction in those fees as well. And that can add up. that can add up to some real money. Had several clients who began offering credit card payments really to their high-risk customers. I figure, well, any money's better than no money. So even if I have to pay 2.5% credit card fee, I'm happy to get paid by this company. But they didn't control it. So it got out of hand. So even their good creditworthy customers were paying by credit card. And the expense of that really increased over the years. So here's a way to rein that in and lower it from where it is today. Cost reduction, always a good thing. Then there's a kind of another cost reduction available, and I hesitate to call it indirect, but it is a result of real-time payments. RTP conveys a better remittance, a more complete remittance information. Uses common standards, so you can find the information in the easier, and which make a key driver increasing auto cash hit rates. And we all know the labor savings that come from raising the hit rates. And the other thing is the remit information is conveyed with the payment. And surprisingly, I saw a survey that said 61% of ACH payments, the remittance information is sent separately from the payment. And that's very true with EDI. EDI will transmit the remittance advice, but the payment has to be made separately through the banking channels. So by having the two travel together and arrive at the same time, it improves the availability and usage of that information. And it can also save your team's time surfing on their customers' vendor portals to get any remit information that's missing. So this can be a big driver, particularly if your auto cash hit rate is low. This can be a big driver of increasing that auto cash hit rate. And when you do that, we all know the cost goes way down. You know, the qualitative benefits, they're faster, more secure, payment record is right there. And also excellent pay upon delivery customers. Now, I'm sure most of you don't have a lot of those customers, but certainly for high credit risk customers, you're really not comfortable extending a lot of credit to them or any credit to them. And rather than pay in advance, they say, well, I'll pay upon delivery. Well, this facilitates that. And this is a common practice in some industries like food service, delivering food to restaurants, particularly now in the pandemic economy. You want to get paid. And this is perfect for that. And so it kind of facilitates what I would call a more normal order and delivery cycle for these pay upon delivery. An advance payment, if they send it by a check, you got to wait 10 days for it to clear. And, you know, the order fulfillment cycle then stretches out to 2 to 3 weeks, as opposed to here's your order, our truck will be there, pay upon delivery through a digital real-time payment, transactions completed, payments received, move on. So in that respect, it's a huge advantage. So that's kind of the pure payment processing advantages of digital real-time payments. But, you know, there's another substantial benefit. If digital RTPs are paired with an artificial intelligence powered digital assistant that sends and follows up on collection reminders or dunning emails, if you will, can be a very, very powerful combination that drives good results. And here's how it works. You know, you need the customer care portal, but the digital assistant sends out an email, call it a collection inquiry. That's a nice way of referring to it. It's a collection ding by any other name. You know, asking the customer, hey, you know, these invoices are past due. Would you like to pay them now? And if the customer goes, yeah, clicks on, The digital assistant brings them to the customer care portal where the payment can be processed, and the digital assistant assists the customer in making that payment if they need it. That's great. If the customer declines and says, no, I don't want to pay right now. Well, and the digital assistant comes back and says, well, okay, when will you pay? And we'll kind of repeat this questions times until they get a satisfactory answer, or they just stop. But I've seen it, and it's reasonably persistent, but very polite, very professional, and pretty effective too. Pretty effective. And the beauty of this is when you think of those small and medium-sized customers that don't owe you a lot of money, uh, but it's starting to age and become a bit of a concern. Well, now you can make a collection contact with them, with 100% of them, every month, every 2 weeks if you want, whatever schedule you want to choose. And it doesn't require any time from your staff. So that's a big step forward. In my experience, most companies struggle with what I call portfolio coverage. That is, you start the month with 1,750 past due customers. When the month ends, have you contacted all 1,750? And for most credit departments, the answer is no. We got the big ones, and we got a lot of the medium ones, but that's as far as we got. So here's a way to make sure you get that portfolio coverage at, great productivity rates. And it is customer service oriented, although it is a collection contact is a collection contact, right? So it is what it is, but very, 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 very useful. And the benefits, you'll get a better cash flow. Now, again, if you use it primarily for your small and medium accounts, the cash flow isn't going to be huge. The incremental cash flow is not going to be huge, but it's those small and medium accounts that pose a pretty big bad debt risk, particularly as those amounts age. And if they're not worked, they have a tendency to slip away. So you'll see increased cash flow. You'll see your past due AR go down. You'll see your DSO go down a bit, but a nice reduction in bad debt exposure. And of course, collection productivity. I mean, if you're contacting half, 2/3 of your past due customers automatically, think of what that does to your productivity. And then you can also set it up to steer customers to more ACH payments rather than checks, particularly through the customer care portal, based on the options you offer them, credit card or ACH. And you can start to have an impact too, thereby lowering your bank fees. So it's a very useful and valuable capability. Just share with you a success story from one of Emagia's customers that they shared with me. Big company, almost 6 billion in revenue, global scope. They implemented a number of elements of the total AR automation solution. But the ones I want to focus on here are the ones that drive real-time payments and the collections we were talking about. So they subscribe to the customer billing payment portal, digital payments and cash app, and collection modules. And deployed widely, global company, a lot of business units, a lot of customers, different countries, different currencies, different languages. And these modules gave them the capability for straight-through processing of real-time payments, and also the capability to perform those touchless collections that I mentioned. The impact, I go back to the customer sat, a lot of customers prefer this payment method, and this company was able to accommodate that. Auto cash hit rate went all the way up to 92%. I mean, that's high. Particularly if you were at 60 or 70, to go to 90 is huge, and will no doubt free up some labor. And an overall 60% reduction in the cost of processing payments They did achieve the 100% portfolio coverage of the targeted accounts, and that led to a substantial reduction in past due. They got the past due down to 50 from a higher number. And implicit in that too is the reduced exposure to bad debt. So this capability, which may seem modest in scope when you first think about it, really affected a lot of indicated a lot of results and drove significant benefits for them. So we've talked about the different aspects of digital real-time payments and how you can combine it with touchless collections. And just to recap here, the benefits, we mentioned customer experience, certainly increased productivity, particularly if the auto cash hit rate is a bit low to start. Raise it up significantly is a big productivity enhancer. And we talked about the collections and the coverage. Lower lockbox bank processing cost. And with the touchless collections, so you can see a nice increase in the cash flow and reduction in the past due AR. And then certain gain at the bottom, is one that personally I'm a big believer in. You do right by the customer, you have a good customer experience, high customer satisfaction, control that credit risk, drive the cash flow. Over time, you're going to have increased revenue and profit. It's kind of like the outcome's really not uncertain. What's uncertain is how long it takes. How well do you implement and execute? But if you do, the outcomes are highly likely. All right. I hope clarified a few things. I hope the explanation of the terminology and the acronyms were useful to you. Just to wrap up here, what may have sounded like, an interesting topic, actually benefits value that derives from digital real-time payments is very significant, very significant. So remember, digital real-time payments, faster, lower cost, more secure, and preferred by many customers. What's not to like? When you combine it with the AI-powered digital assistant to do these touchless collections, you can also see significant benefits that you will see when you improve your management of the AR asset. And the key to achieving this, though, is the AI digitization and the automation. These benefits are directly linked to those automation capabilities. Questions?
Thanks a lot, John. So as we get into the questions, since we have been talking about the digital real-time payments, first I want to check, like, why do you compare digital real-time payments with EDI?
Well, they're actually both very similar when you think about it. I mean, both provide a direct, secure connection between buyer and seller, where information, data can be transferred and transactions executed. Big difference is EDI is a big deal to implement in terms of time and money, whereas now the digital real-time payments are very common and don't require a big investment in time or money. So in some respects, it's a poor man's EDI.
Got that. Yeah. So the next one I want to check is why do these digital RTPs raise auto cash hit rates?
It's the quality, completeness, and consistency of the remit advice that they convey from the buyer to the seller, from the payor to the payee. A couple things contribute to that. One, the remit advice travels with the payment, so they arrive at the same time, and then they're linked together. Secondly, the RTP does have standards for that regulate, if you will, the quality and location of the remit information. So it's that combination of features can go a long way to making the Cash App challenge much, much easier, and specifically drives the auto cash hit rate higher.
Sure. Thanks a lot, John, for that. Now, John, we've been talking about automated AI, usage of the automated AI and all, right, in terms of overall finance processes. How does the automated AI-powered touchless collections reduce any bad debt exposure?
Well, remember, and I touched on this a little earlier, when you think of collections, your big accounts, you want your best collectors to handle, on a personal basis, email, phone calls, whatever, for a couple of reasons. One, you want to have that personal contact to build some rapport, to quickly address any obstacles to payment your big customer might have, and to remind them that when we say 30 days, we mean 30 days, not 40 days, not 50 days, and that kind of continuous personal contact goes a long way towards reinforcing that. Unfortunately, you can't do that with all your customers. So you focus that attention on your large customers, and that's where the revenue comes from, and that's where the cash comes from. The problem is with the small and some of the medium customers, they just don't get the attention they need, and that past due can kind of slide out and get worse, get older, to the point where it reaches the danger zone where the probability of collection starts to drop significantly. And while it doesn't hurt your DSO that much, it doesn't hurt your total past due that much, or past due as a percent of total AR. Where it does pose a threat is bad debt, because they kind of sneak into the danger zone, and then for some of those customers, it's too late to recover the money. So when we think of the touchless collections and we think of it focused on the small and medium-sized customer, its greatest impact is with the customers who would be neglected under normal collection scenarios.
Thank you very much, John, for responding to those questions. I appreciate that a lot. We are just a few seconds away from the top of the hour here. So I do not see any other questions coming in. So I'd like to request all the participants to look forward to our next masterclass, which is AR in Europe, Strategic Outlook for 2021. We're going to be having a guest speaker along with John as well, to get us a lot more insights into the AR processes in Europe. So we look forward to seeing you on the Thursday, which is 25th of February at 10 a.m. Pacific time. Please do book your seat for this session. And in case if you do have any questions, please do write to us at info@emagia.com. We look forward to seeing you for the next masterclass. Thank you very much. And thanks a lot, John, for being a wonderful masterclass speaker with us. We look forward to seeing you continue the same on, and appreciate all the knowledge shared that you have been providing to all of us over here with all your experience over multiple decades. And we are very grateful to that. Thank you.
My pleasure. And, for the audience, if you think of a question after this session, feel free to submit it to the address there. Happy to answer any and all questions.
Thanks a lot. And thank you all, everybody joining us today. Take care.